Alright, so in this video I want to introduce you to the CoT data, and I'll be looking at the spreadsheet. Okay, this is what we're going to be looking at right here, and I'll be showing you the different things that the spreadsheet helps us to understand. Alright, so first of all, a brief explanation of what the CoT data actually aims to help us understand. It aims to show us the institutional positioning, okay, on a weekly basis. Now the data that is being given is the data for the weekly position of as of the Tuesday positioning of big institutions, and they are broken down into two groups. You have the non-commercial, okay, and then you also have the commercial. The non-commercial are the banks, the banks, the hedge funds, and so on and so forth, while the commercials are the multinational companies. And the reason why they are grouped into two categories is because of their method or their purpose for trading. For non-commercials, the purpose of their trading is to make profits. So instead of calling them the non-commercial, you can also call them large speculators, okay? But for the commercials, the purpose of the trading is not to make money from speculating. They are in this market to hedge against risk, the risk of price fluctuation. So that's what they are in the market for. So they are here to hedge against risk. So they are hedgers basically. So which means that for the non-commercials, because they are speculators, they are trend traders. These are large traders who trade in line with the trend. But for the commercials, they do the opposite. Okay, they do the opposite of what the commercials are doing. So since they are in the market for hedging, they buy when they expect the market, or when they expect prices to go down, and when they expect prices to go higher, you will see them increasing their sales. Okay, so because of this simple fact, what I do is I use the long positions of the non-commercials, and I leave it as that, a long sentiment. I interpret that as the long sentiment of big institutions. But for the commercials, due to the method or to their way of trading, instead of using their longs, I use their shorts, because when they are expecting more bullish prices, they will increase their shorts. So for me, the commercial shorts are regarded as a long sentiment for me. Okay, so this is the data I extract from the CFTC website, cftc.gov. okay, that is where the data is gotten from. And if you need more, you need to read more on CoT data and all of that stuff, you can go over to their website to read that. But it's a very simple thing to understand. The CoT means commitment of traders. So it's showing us the open interest of these large traders, for the particular time they're reporting it. So the data is showing us the position of these big institutions as of Tuesday. Okay, Tuesday of every week they record this data and then report it to CFTC, and CFTC will make it available on Friday of that same week. So there's that little time gap right there. So they make it available on Friday of that same week. Now it is not the data that is to be used on a day-to-day basis, but you can use it on a day-to-day basis, especially if you have already formulated your directional bias. Okay, but you can't just take the data, because it's not reported on a daily basis, it's reported on a weekly basis, and that means that it is best to be used as a longer term indicator, right? A bigger time frame indicator. So the data is actually reported on on Tuesday to CFTC. CFTC makes it available to us on Friday. And the way I've designed this particular worksheet, we designed it in such a way that the data is downloaded automatically every week from the CFTC website. So over here you have CoT live data. So every week this page is going to download automatically that data. Okay, once you have your network connection on, it will download automatically the data once it is released for the different commodities. Okay, and then also this is done automatically. The data will be transferred for the respective instruments. Now these right here are the instrument we monitor. We have the dollar index, we have the euro, the pound. So when you click on these tabs right here, it will take you to the spreadsheet for that particular instrument. We have the Canadian dollar, we have the yen, Australian dollar, New Zealand dollar, Swiss franc, and this right here is the government US 10-year note. Okay, and then this right here is gold, silver, we also have copper, and then we have crude oil. All right, so we have all of that right there. So every week, once the data is downloaded to this particular page right here, this particular spreadsheet, the CoT live data, it is transferred automatically into the spreadsheet for these different instruments. So for instance, let's take the US dollar index. So once the data is released on Friday, it's always released around Friday 3:30 p.m. New York time. That is when the data is being released. So once it's released, we get it right here automatically on this particular page, and from here it is transferred to the respective instrument. So we are using dollar index for example. So right here on the dollar index, we have this right here where we see current data. Okay, so the current data is going to be the data for that current week. Okay, so we don't even have to consult the CoT live data spreadsheet. Every week these cells right here are going to be updated, these 4 cells. So this right here is the long for the non-commercial, and this is the short for the non-commercial, and this also is the long for the commercial, while this is the short for the non-commercial. Okay, I mean for the commercials. So this right here, this 2 is for the commercial, and this 2 is for the non-commercial. Okay, so this will be updated automatically across the different instruments. So you can see all of the instruments have that particular row. Okay, so the way I use the positioning of these institutions, these big institutional traders, the non-commercial and the commercial, just like I was pointing, I use the long and the short. Okay, the long of the non-commercial and the short of the commercial, I use those two positions as the total long sentiment. So the total long sentiment right here, right, this is the total long sentiment. This total long sentiment is an addition of the longs of the non-commercial and the shorts of the commercial. Okay, that gives me my total long sentiment. When I see the total long sentiment increasing, it is telling me that these guys are doing something with their long positioning, so they are actually believing the market should rally, okay, and so on and so forth. We're going to talk about patterns of the CoT in another video, okay, but I'll do my best to give a bit of introduction here. For the total short sentiment, this right here, is the total short sentiment. For that, I use the non-commercial shorts. Again, remember, they are trend traders. These are large speculators. So we use the total short, the shorts, and add it to the longs of the commercial, because these guys are hedgers. When they believe the market is going long, or when they believe the market is going short, they're going to be adding to the longs. Okay, so for me, their long positioning reflects their short bias. So we add their shorts to the longs. We add the commercial longs to the short of the non-commercial to give us the total short sentiment of the big institutions. Okay, so what we have right next to the total long sentiment and the total short sentiment are just calculations to put the data, this total long sentiment and total short sentiment, into perspective. Okay, first of all, we have the week-on-week rate of change. That is this WOWROC. That is the week-on-week rate of change. So what that's doing for us is we are looking at how this week's data increased or decreased compared to the previous week. Okay, that's the same thing we have right here. Okay, for instance, what we can see right here is that based on this, we had a 15% increase week on week for the total long sentiment. So we see that the previous week was 35,335, and this particular week right here was 40,779. So that was the 15%. There was a 50% increase. Okay, week on week, and then the following week we had an increase by 25%. So which means that they were increasing. They are increasing their positions for longs right here. Okay, that is for the dollar index, right? So just by looking at the week-on-week rate of change, it's beginning to put things into perspective. We're looking at this week compared to last week. That makes sense, right? So if you see, for instance, if you look at it very closely, you can see there's a coloration. Okay, there's a coloration right here. We have for the week-on-week rate of change for the total long sentiment, we have this coloration right here as green. Okay, so when they are adding positions, and for us, if it is above 2% increase, if it's above 2% increase, the coloration will come on. Okay, that is just pointing to the fact that what is being added is a little bit significant and notable, something that we should take note of. For the week-on-week rate of change on short sentiments, the coloration is red. Okay, red is just to signify that they are selling, and green right is to signify that they are buying. Okay, so that is how we use the week-on-week rate of change to put things into perspective, to put your longs and the short sentiment into perspective. Now when we have, for instance, okay, let me use this right here. There's a short, this right here, we see 1 2 3 5 1 2 3 4 5 6 7 7 week in a row where they were increasing their shorts, right? That is therefore suggestive of the fact that they were accumulating short positions, right? Because 7 weeks in a row they were increasing the shorts. When you see it like this, at least when you see 3, or when you see 2 and then a pause, then you see another 2, right? That is showing us that there is accumulation of either longs or shorts. So in this case we have an accumulation of shorts. Right here there's an accumulation of longs, and also right here an accumulation of shorts, long accumulation right here, long accumulation right here, long right here. Okay, so that is one way that you can also use the week-on-week rate of change to find areas where they are accumulating. So using that and looking at the charts can help you to spot real demand zones where they are buying or real supply zones where they are selling. So for instance, if you see a drop on the chart and you can, when you look at the chart, you can mark out a supply zone right there on the chart just by looking at price action. And then by coming to the CoT data, you now see that around that area where the drop happened, around that particular time, there was an accumulation of shorts in real time. That makes that level a key zone or a real supply zone, right? Which you can back up with data, and that makes it even much more powerful. Okay, so that's how we use the week on week rate of change to put the data into perspective. This right here is the long sentiment versus 13-week average. We also have it for the shorts. You have the short sentiment versus 13-week average. This is another way that we put the data also into perspective. So what this is actually doing for us is that it is showing us what the current position, long or short, what that is compared to the 13-week average. Okay, so the 13-week average is just taking the last 13 weeks and we average that, and we are comparing that with the current week. Okay, when the current week is actually above the last 13 week, it will show as a positive. So this right here is 40%. So it's showing us that the current week is 40% above the 13-week average. That is bullish. Okay, that is very bullish. When it's above, it's bullish. When it's below, we take it as bearish. Now the 13-week average for us is considered to be the normal level of buying or selling. So if we're looking at the long for longs, the 13-week average for longs is considered to be the normal level for buying. If we're looking at it for shorts, it is considered to be the normal level of selling. Okay, so for this particular week right here, 2023 September on the 19th right here, this is when the data was released. What we can see right is that for the longs, the current week's position for longs is 40% above its 13-week average. That is bullish. For shorts, we can see that they are 33% below, no, they are 9% below the 13-week average. For us, that is bearish. Okay, now when we have it like this, where they are all, the positions is just above it, just sitting above it very comfortably, then we can say that is, that they are super aggressive. Okay, so you can also show their aggressiveness, all right, for the longs or the shorts. All right, so that is one way we put it into perspective. Now when we begin to talk about CoT patterns and all of that, we will also touch on this. So here also is another way we put it into perspective, looking at the net position. The net position right here is actually calculating the total longs minus the total short sentiment. So the longs minus the short sentiment. Okay, this is right here. Total longs minus total short sentiment. That is what gives us the net position. So when you minus this particular week 50,911 total long, and you take this, you minus total short from it, 17,969, it gives us this. Okay, so when the figure is positive like this, we say that they are net long. Now when the data is showing us that they are net long or net short, it doesn't simply mean that that is what they're actually doing. So if it's net long, it doesn't mean they are buying. If it's net short, doesn't simply mean that they're selling. Okay, so this is why we actually put the data into all this different perspective. Okay, then we have this right here, the 26-week CoT index. What this is actually showing us is where is the current net position compared to the last 26 weeks. Okay, a reading of 100 shows that we are seeing the highest net position that has ever been recorded in the last 26 weeks. Okay, so this is a reading of 100. The reading of 0 is showing us that this is actually the lowest reading in the last 26 weeks. The lowest reading in the last 26 weeks. Lowest reading in the last 26 weeks. When we are showing 100, it is showing us that that particular asset or particular instrument is overbought based on that 26-week CoT index, and it is suggestive of the fact that a correction should be around the corner. A retracement to the downside could be around the corner. And if we are seeing 0 reading, that is considered to be an oversold, and it is suggestive of the fact that they are overselling, and we might be seeing a profit taking start to play out, right? And this right here is the percent long and the percent short. It's just looking at the positioning of these guys, and while we have it right here, it can also point to us how aggressive that the institutions are positioning themselves. Okay, how aggressive they're positioning themselves. For instance, here it was 85, your longs were 85, and it started reducing to 77, 66, 61, 56, 56, 63. So we can see that their longs positioning is beginning to reduce right here. You see that now, but here we can see that the long positioning began to increase, 55, 57, 60, 74%. You see that why their shorts was actually reducing. So this also can throw more light into the data and help us to draw more information out of it. So above right here, what we have right here is the 3-year all this data right is showing us 3-year max or 3-year minimum. So for this first row, all this is showing us 3-year max. For instance, this right here is showing us a 3-year maximum recording for the last 3 years for the longs for non-commercial. Then this right here is showing us the maximum reading for the last 3 years. Okay, for last 3-year period, right? For non-commercial shorts. And we didn't have that right here for commercials because of the fact that they are hedgers and they have access to unlimited cash because they are not in this market to actually trade to make profit. These guys are actually hedging against risk. Okay, but the non-commercial on the other hand, you know, we actually would like to follow them very closely because of the fact that they are speculators, and they can actually get into a position of a real overbought or real oversold. All right, so this right here is showing us the total long sentiment 3-year maximum and 3-year minimum, and here is showing us the total short sentiment 3-year maximum and then 3-year minimum. Okay, here is showing us the net position 3-year maximum and the 3-year minimum. All right, so we can also look at this to help us draw information and put this data into proper perspective. For instance, this right here is the pound. So the 3-year maximum for the total long sentiment is, you know, 311,668, and this was when it was recorded. Okay, So from that point we started seeing profit taking, because why? They were overbought. And also the 26-week CoT index was also showing overbought. So both of that is suggesting to us that we are most likely going to start seeing profit taking. All right, for the longs right here, you can also see something very significant was happening. For the non-commercial longs, they were already over leveraged on the longs. Why? Because we can see that the highest or the maximum was 136,897 over a 3-year period. That was the maximum positioning, and this was when that reading also actually took place. The same week we saw the total long sentiment reading take place. Okay, so that information is very important. It's suggestive of the fact that they are over leveraged on the longs, over positioned on the longs, and should be taking out profits anytime from that point. Okay, so that is how you can actually use this maximum and minimum readings to throw more light into the data, and it can help you to use the data to predict future prices. Okay, so this right here is the date, and I think we've pretty much run through all of the the different information, the numbers, what they're telling us. I think we've run through that. Okay, so back to the US dollars index. So if you want to go to the data for the respective, for each or for any of the currency or any of the assets, you just come down to the tab right here, you click it. Okay, and that is it right there. Okay, now to update the data, once you have a new week, weekly data updated right here, so what you want to do is to now update the spreadsheet. You got to do that manually. So what I do is this. The first thing I do is I come here, you look at this, the last data, not this empty column. You have to leave this column empty, okay, for this to work out nicely. So you come, you right click, and you come to insert and click on insert. Okay, once you click on insert, another column is going to be shown right here. Another column will be given you right here, and this is where you want to now insert the current week's data. So all you got to do is to come here, copy that. So how did I do that? Okay, hold down the right, okay, right click, left click and hold it down, and then drag to the right until these 4 cells are covered up, then release, and then right click it to copy. So once you copy that, all you got to do is to come to this first cell right here for the non-commercial, highlight it, then right click, then you want to paste as values only, values. Okay, so once you do that, if you paste as values, it's just going to paste the values. If you for instance go ahead to paste just this normal paste, it's going to paste both the formula right there, and you don't want that. So just paste as values, simple. So once you have that, you want to include the date right here, and to get the date is very simple. Once you come here, you'll be able to get the date. Just look at the date right here. You should be able to get the current date. Just copy that and go ahead and paste it right there. And to update this column right here, all this area, okay, to put the data into proper perspective, all you got to do is to come, start from the total long sentiment, because that's where we need to update from. Okay, you click it, then drag, you left click, drag to the right to highlight all the cells, and then you pull it up. Okay, sorry, you left click, you drag to the right, release. Then come to this point right here and then drag it up. Once you do that, you see that everything is updated. Now, the reason why everything is showing same except for the week on week rate of changes is that this weekly data is also this data right here. I've already updated it, so I'm just gonna click back. So I'm just trying to show you how you get to update the data. All right, it's a very simple process, so you got to do that for all the different instruments, okay, and to update your spreadsheet. All right, so one more thing that I want to show you is right here. When you come to this point right here where we have C chart, this is actually showing us the data, okay, in charts. So what we have right here, for instance, is for the dollar index. This is showing us the total short sentiment, and the thin line of the same color is the 13-week average. So it's kind of showing us in picture what the numbers is actually showing us right there. So we're looking at the 13-week average versus the total short and total long sentiment. This is the total short or total long sentiment. We can see it is trading, or it is moving below its 13-week average. That is suggestive of the fact that they are taking profits from longs, right? They are taking profit from the longs that they recorded here, or they're actually not interested in the longs and they're selling off. So here we see how the longs went above the 13-week average for the past 2 weeks. Okay, that is suggestive of the fact that they are super bullish, right? So that is it right here. And this area chart, all right, this area chart right here is showing us the net position. All right, it's showing us the net position. So here where net position is decreasing, reducing, well, that is showing us that they are reducing their longs, and that is causing the net position to gravitate towards the zero line. Okay, and so when you come up here and click on go to data sheet, it takes you back to this point. All right, so that is it about the spreadsheet. It's just a simple walkthrough for the spreadsheet. We'll be talking about application and patterns, you know, in subsequent video. So cheers.